Welcome back to another episode of The Gold Standard. We're in beautiful Miami, Florida, as you can see behind me. Thanks for joining us. We're going to get to it. There's some very important articles that you need to hear about, and one specific thing you may not hear anywhere else, but this might be the most important video that you ever watch. It's a bold statement, I know, but we'll be at a Y in the road here because of it. You'll either go right or be forced to go left. I'm being ominous on purpose, but let's dive in, because as your full-service precious metals investment firm, we want you to be educated, to stay up to date with timely articles, events that are happening, because the world is changing a day at a time, and you're seeing this represented in the markets. We've never seen such volatility. Experts warned you about this months ago, that 2025 would be filled with nothing but volatility. Expect the unexpected. Jamie Dimon is America's largest bank, JP Morgan Chase's CEO. And a Forbes article recently published simply says this: Forbes recession tracker. JP Morgan's Jamie Dimon says recession probably coming. What does probably mean? Well, the head of the U.S. largest bank, economist, and a former top-ranking White House economic official all warn that the U.S. will likely tip into a recession as President Donald Trump's tariffs go into effect. And this is reflecting the bloodbath on Wall Street over the last 5 days in response to economic policies threatening to bring higher inflation and far weaker economic growth. So in this article, it's very important, when America's largest bank, JP Morgan Chase, their CEO comes out into the public. It's his job to not only make sure that his employees and his shareholders have peace of mind, but how about the customers? And more or less, he's issued many different warnings throughout the last few years, but to hear him say this is definitely something you should pay attention to. Later on in the article, it talks about how number of different things going on at once. In fact, UCLA's Anderson School of Management published last month an official recession watch. This was the first time in its 73 years of economic forecasting. So we have a lot of things flashing red warning signs. And I love that people are optimistic, but the saying is not hope for the best, plan for the best. It's hope for the best, plan for the worst. So that article really brings some things to light that we're all thinking or feeling. What are the impacts of tariffs going to really be long term? Well, Ray Dalio, who is this guy? Ray Dalio is the founder of the world's largest hedge fund, Bridgewater Associates. Stepped down just a little bit ago, has handed the reins over to the now CEO, Nir Bardia. Ray Dalio still comes out as he's one of America's top founders of a hedge fund, economist, and just not your average run-of-the-mill billionaire. And I say that because he got to where he was studying ancient civilizations, life cycles, their currencies, what they used as currency, how long they used the currency, what currency they switched to, and why they had to switch. Ray Dalio has recently always said, don't make the mistake of thinking that what's now happening is mostly about tariffs. That might be the trap or the rug that people will have pulled from out underneath them. What was happening before the tariffs and the implications of the tariffs and what's going to happen when the tariffs do this and that has added fuel to the fire. But where we were in valuations versus gross domestic product has been a problem far before the tariff implications. And Ray Dalio wants to remind you of that. These are just adding to the uncertainty. They're not the uncertainty by themselves. With the money supply issue, again, how he got to where he was and has become an expert, And I'll have the producers throw this up on the screen again. There's something called a capital rotation event happening. This is the part of the video where I have to take a little bit more of a serious tone, because this is where I was saying you're at a Y in the road and you're either going to go right or be forced to go left. What does a capital rotation event mean? Well, let's dissect the phrase. Capital, money, rotation, moving that money to something else, and an event. This does not happen often. In fact, the capital rotation events have only happened 3 times in the last 100 years. Let's dissect, because it's very important for you to understand what this means. We have to go back to 1930 to look at the first capital rotation event. 1930, that's an interesting date. Well, what happened around 1930 for everybody to rotate their capital, for everybody to move from one thing to another thing? Well, the 1929 stock market crash that sparked the Great Depression might have something to do with that. But if we're looking at the different segments, the different sectors, communication services, consumer staples, energy, financials, healthcare, materials, real estate, technology, utilities, we can all look at these different segments, and if they have entered a bear market versus gold, that would signal a capital rotation event. Now, all these boxes have to be red. They all have to be in a bear market versus gold. We've now achieved that. What you are looking at is published by our friends over at North Star Charts. Great resource for you to pay attention to as well. This is what a capital rotation event is. And what you're looking at on the screen here is 12 different segments or sectors that have all entered a bear market versus gold. Some of those are utilities, real estate, manufacturing, financials, healthcare. You get the point. You can see that. Now, when these boxes turn red, capital rotation event has been confirmed. One by one, they all turn into a bear market. The process continues until eventually leading to this event. During these events, markets fall 50 to 80% over a 1 to 2 year period. Markets then take many more years to claw back to where they started. This marks the next rotation. While they're slowly clawing back, capital markets rotate from the old thing to the new thing, and you see the growth here, right? Read this with me. Gold, silver, commodities, energy, oil massively outperform, rising hundreds of percent, and in some cases, thousands of percent. We have entered a capital rotation event. I've said in many previous episodes, gold has been purchased by more people in the last 3 years than any other 3 years. The momentum has switched. The herd mentality is real. You don't want to do something just because everyone else is doing it. Like your parents told you that in high school. If your friends drove off a cliff, would you drive with them? But there is some validity to this. People have chosen that their current path will no longer line up with their goals, and that a different path is the best way to go. When we're looking at Jamie Dimon saying a recession is probably going to happen. When we're looking at Ray Dalio saying we had problems before the tariff implications happened. And we haven't even talked about this, but our debt is approaching $37 trillion. Now we're breaking records you don't want to break. Why do I say that? We were adding $1 trillion of debt every 100 days. In 2025, the first part of the year, we added $1 trillion of debt in the first 71 days of 2025. Unfortunately, I have a feeling that 2025 will be talked about in the history books 50 years from now. And if it's not just because of volatility, and it's not just because of market loss, gold, we have a war on the dollar. Now, here's an interesting story just to go back to Ray Dalio, because the founder of the world's largest hedge fund, Bridgewater Associates, studied currency life cycles. Now, Venezuela was once the 7th wealthiest nation on the planet. And, You know what I have here for you? A little show and tell, because this is a bolivar. This is a $2 currency, $2. And here's a $5,000 note as well. Beautiful money. There's actually a turtle on here. What I'm about to show you here is 5,000 bolivars made into this turtle. When they had inflation, hyperinflation, and their markets crashed, this is what their currency has turned into. This is a turtle made out of these notes here. I bought this off the internet for $7. This is how worthless their currency has become. And you can Google pictures of Venezuelan currency in the streets. People threw it out of their windows. People burn it for warmth, like Germany in the 30s. And Americans want to believe that we are immune to these types of problems. But let Ray Dalio remind you that every single currency that mankind has ever created has gone to zero. And based off of thousands of years of research and civilizations, Ray Dalio says our currency is at the end of its life cycle. Now, gold has an inverse relationship to the purchasing power of the dollar. And that's one of many reasons why it has become the asset class of choice by so many millions of Americans. In fact, the market cap of gold achieved over a $21 trillion cap during the year of 2025. It tends to be a safe haven asset that people turn to when we have the uncertainty that we have. Now, there's so many articles out there, but Ray Dalio, Jamie Dimon, John Hussman, Robert Kiyosaki, Jim Rickards, all of these experts saying, hey, expect some uncertainty ahead, but what do we do about it? The two previous names I'd like to point out right now. Robert Kiyosaki, Rich Dad Poor Dad author, is a huge advocate of precious metals as part of your overall portfolio. Jim Rickards, just your average CIA Pentagon threat analyst to the White House, been an economist for over 50 years, helped craft the petrodollar agreement. I bring his name up a lot because if you are considering precious metals, you're going to have to learn that name. He's all over the internet. If you have considered precious metals or you already own, you've already heard that name. And it's pretty incredible because Jim Rickards has anticipated, here's his projection. And if you're standing up, sit down, because Jim Rickards says gold will go to $27,533 an ounce. And that is not a guess. That article headline sent shockwaves through the precious metals industry. Back to the capital rotation event. 1930, everybody rotated their capital. The next time was 1972. Well, what happened previous to 1972 that everybody wanted to rotate from what they were doing into gold? Well, Nixon takes us off the gold standard in 1971. Gold goes up 2,000%. Let's skip ahead. The next capital rotation event actually is in 2002. And there were two events that took place that made everybody go from one thing to another. 9/11, as well as the overvalued tech bubble that burst and crashed, sending everybody to gold. The fourth time, again, I just showed you a chart where 12 sectors are in a bear market versus gold. The fourth time in the last 100 years is happening right now. Everybody is seeing the current trajectory with uncertainty. And a lot of people have chosen to make the switch and participate in massive profit potential. We don't know what the world has in store for us. We have a big question mark. There's plenty of uncertainty out there. The best thing that you can do is come gather information, have a conversation, and then you'll be better informed to make the best decision for you and your family. What I meant by if you don't take a right, you're going to be forced to take a left. We've seen this before. I noticed during the capital rotation events that I mentioned, 1930, 72, 2002, now, I did not mention 2008 great financial crisis. That was a significant drop in people's retirement accounts, but it wasn't an official event. Notice I did not say Black Monday 1987. That was a big market loss event, but not a capital rotation event. The period of time in between these dates, 1930 to 72, 40 years. 72 to 2002, 30 years. 2002 until today. You may not get another opportunity like this if you happen to be in your 60s, 70s, or 80s. If you don't make the choice may be made for you. A lot of people have been told to ride the wave, weather the storm, hang in there. What goes down must come up. A lot of people have hope that a new administration may be able to offer some things the previous administration did not. But at the same time, we had a lot of these problems, according to Ray Dalio, that have nothing to do with the tariffs. They've only added fuel to the fire. Now that you've heard Jim Rickards' gold forecast, $27,533 an ounce, and that is not a guess, is a bold statement. But look at what goes into that statement. He has some information that you and I don't have. He's also been previously correct many of previous times. That's taking into consideration the debt crisis we may have. And again, Ray Dalio, the person we've been talking about, said the United States will suffer a debt heart attack in the next couple of years. That is incredible profit potential. Will it happen? Nobody's really certain about that. But if we look at the capital rotation events in history, 1930, 1972, 2002, Jim Rickards' $27,000 gold doesn't seem that crazy after all. And the previous events, did we really have a war on the dollar that we have now? Did we have a debt problem that we have now? Even if it does half of what Jim Rickards is saying, while everything else seems to be fading away or volatile, this is why millions of Americans over the course of centuries and millennia have turned to gold and silver as a store of value and to provide peace of mind. We'll leave it there for right now. This is yet another edition of The Gold Standard. Brett Bultje, Director of Education here. This is all brought to you by Cedar Gold Group. Thanks for watching. We're rooting for you. Give us a call. That's all you can do. Until next time.